All right, let's talk strategy. You and your partner have finally saved $100,000 between the two of you, and you're ready to get into the real estate market. You're wondering, do we blow it all on one dream property, the biggest and baddest that we can afford? Do we wait for the market to crash a little bit more and get a perfect deal? Or is there a smarter way to turn this into a real estate portfolio? Here's what I would do if I were starting over today with $100,000 between myself and my partner and no properties. Let's build this smart. So what's the first move? The first move is that we're going to purchase a $500,000 or less two-bedroom condo in a strong upcoming area. What we're looking for in this area is one that has strong potential upside in the years to come. We're also going to be looking for a unit that needs a lot of cosmetic work. That cosmetic work is where our upside lives. 20% down is what we're going to be targeting. That allows us to keep ourselves outside of insurance premiums, keeping more money in our pocket and keeping our payments a little bit lower. From there, we're going to use a purchase plus improvements mortgage program in order to fund roughly $30,000 worth of renovations. Those renovations, we're going to be looking to replace the flooring, paint, bathrooms, cabinetry, whatever we can fit inside of that budget that's going to add immediate value to the unit. This is going to help us increase the value in the years to come on this property. Monthly payment, probably going to live somewhere in the $2,200 to $2,600 range, depending upon your interest rate at this point in time. We want to keep that payment as low as possible so that we can take advantage of our prepayment privileges in order to aggressively pay down this mortgage. This is not your dream home. This is your first leveraged asset. We're going to look to live in this property for at least the next 2 years. You're going to get owner-occupied rates. You're going to gain equity through the renovations that we've created, the market growth, as well as your mortgage paydown. Let's keep things conservative. At 3% appreciation per year, we're looking at roughly $30,000 over the next 2 years. $25,000 paid down in mortgage principal potentially, and a $30K lift from the renovations. We're now sitting on $80,000 to $100,000 in equity that we can now use for our next step. This is where things start to get interesting. Here comes our first real move. Now we're going to refinance that property in order to pull out the equity that we have been able to generate inside of the last couple of years. We're going to use that equity and we're going to now go search for a market to purchase our first investment property. We're going to look for a market like Alberta that has lower entry prices and better cash flow from the rents that you're able to find there. From there, we're now going to own a renovated principal residence that continues to appreciate. We're going to have a rental property that pays us monthly. And you started with a single smart decision, not a windfall. From here, the blueprint stays simple. We add value, we build equity, we refinance, and we invest. In 8 to 10 years, you could own 3 to 4 different properties and have a portfolio over $2 million and a net worth approaching 7 figures, all because you started with the smart move and delayed the gratification of purchasing the Instagram-ready dream home that you could have showed your friends. Real estate success doesn't require timing the market. It requires entering the market strategically. It doesn't require the perfect property. It requires a plan and the guts to follow it. I'm Tyler from Pilot. If you have $100,000 and you're looking to turn that into something bigger, send me a message or book a call. Let's build your real estate portfolio one smart step at a time.